Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on QCOM. Reason for this is they had quite big news on it yesterday. That was on a share buyback. I think it was $10 billion. Yeah, $10 billion share buyback program. So basically just means they're buying up their own stock, which will mean there is less outstanding shares, which naturally anyway will increase the price of the stock. But what it also tells investors is that if they're willing to be buying back their stock, they are optimistic, obviously, about their future. So it's always a good sign all round when companies are doing share buybacks, and we can see, looking off on the charts, that it was oversold and is considered a low risk and cheap area to be buying the stock, especially if they're buying back their own stock. So as always, we will do our normal analysis routine. Firstly, going onto a plain daily chart, see where are the gaps, where we likely to see gap fills, and looking straight off the bat, we can see the majority. This stock, actually we can see, is a very large gapping stock. It's got gaps everywhere. So the key thing we're going to be looking at right now is kind of the key gaps that we will be looking for. So any of these where they're very clear gaps are the main ones I look at, because I don't like gaps. For example, let's say this gap here, well, it actually got filled, but let's say, I mean, you got tons of mini gaps, but they're ones, basically, when they're gaps within here. So like here, for example, this gap here, I mean, it's still not been exactly filled until we got to this day over here. But the reason I don't like these is, unless you're specifically looking for that kind of gap fill, you miss them. Whereas these kind of gap fills, where the candle doesn't touch on the next day or the following few days, it's very clear to your eyes just that there is a gap there. So they're usually the main ones that I am looking for, just because they tend to have the biggest reaction when it comes into these levels. So that's the main thing. Like even these, I'm a bit more hesitant on, but as they are the top or bottom of a swing move, again, they usually have some significance. So we can actually see that one was filled, so there's no point in that. Oh, and we can actually see that this one was filled. So looking straight at this, there isn't really that many gaps, or any gaps that really stand out to me. So apart from this 162, I'm not really paying attention for any gap fills to happen. So then we go over to the deviation charts on both the 4-hour and the daily, because these will give us tend to be entry zones, take profit zones, and basically, yeah, just our zones that we're actually looking for. The only part we use the gap fill for is we can use it as a profit target, as a reversal zone, and also if the stock is coming close into that level, we know more likely than not, if it's been a gap that hasn't yet been filled, it wouldn't be unlikely for the stock to continue and just fill that gap. For example, if QCOM was at 155, we would kind of expect it kind of just to keep doing that push to 162 just to kind of fill that gap. So they're really the main ways we use the gap fills. Now we're going to be using the deviation levels, and we can see, which isn't unsurprising, that at 121.75, literally the exact bottom that QCOM's gone in this year, was our second deviation. So that we already know is a low risk buy zone for at least a bounce play, and if not, could be a reversal zone, which in this case it looks like it will be a reversal zone, because not only we got a sharp bounce off it, but we have also got the buyback news, which will probably on keep pushing this move onwards. So what are the key levels we're looking for? So right now we are coming into a resistance where if we are going to continue down, this will be the level where we will fail. So this 129.25, this is our first deviation on the 4-hour, and we can see we don't have any full deviations above this until you can't start coming to statistical mean on either chart. So what this tells us, if it breaks through, then we're most likely going to continue this uptrend. But if it struggles to be closing above this 129.130, then it's most likely not a reversal and will continue down. So how long do we want to wait for it to break out of this move? If it's not broken out of here, I would say by Monday close, then it says just stock I would stay away from. Reason for that is it's showing that people are buying it up, but they're hesitant about it. And where there's not clear buying strength, it's usually a bit more of a risk when you can find an alternative stock with the exact same setup, but with more buying pressure. So usually, if they don't break through kind of right away, you're just taking unnecessary risk. At least that's how I personally look at it. So then what other levels do we want to be looking at? The 126.50. statistical mean. I mean, we'll plot all these and then kind of go on what we will expect to kind of happen, and how we will be trading and reacting around these levels. So these are the key levels that we will be paying attention to. And yeah, so these will be it. So obviously right now we've had our bounce at the 121 level. We've now broken through the 126, which is this first deviation here. However, as we haven't really came down to a full deviation, it's not that surprising of a break because it won't have as much reaction the second time around. And has come straight into the first deviation on the 4 hour. So for this, if we're going to continue into an uptrend, we want a close around, above this deviation level. And again, if we don't have it by Monday, then it's showing that the buying pressure is a bit weak and it's probably a bit safer just to maybe stay away from the stock. And then once we break through here, or hopefully break through here, we have quite far targets. That will be the good thing about this trade, is that we can be quite ambitious on where we want to take profits. So firstly, we're going from 135 to 136 level. This level here is, you can use it as a bit of a profit target because this could be rate reversers. But what I tend to do is take in a bit of profit here, but then hold the rest of the position. But we would move our stop to break even when it comes into this level, because if it comes into this deviation and fails, and then pushes back down, it could quite easily bounce off this first deviation again and could try and retrade it. However, if it comes back down and fails that first deviation, then it's most likely going to fail overall, so it makes sense to be getting out if it fails that first deviation on there. But what it basically means though is we can be looking to take this trade around 130 and be looking for a around 11 to 12% move, and be looking in profits coming into the 144, 145 area. And this would be our first profit target. Doesn't mean, or the first key profit target, doesn't mean we'll be locking in everything here, because we could quite easily push higher. So here is just where we would be locking in profits, moving our stops most likely below statistical means at 135, but be looking for that push higher. And again, we'll be looking to just kind of start cutting off size into each of these key levels. So 151, 155, 159, all levels we would start chopping off size and just reducing our size. And where would I look to be completely out of it? For me personally, I would want to be out of this trade completely at 162, 27 or 25. Reason for that is, firstly, you'll be up 25% of the position, so already that is in a very ambitious move, especially on a large cap stock. But it is also achievable. I mean, probably won't happen within a week or even a month. You probably have to be in this trade for 2 to 3 months if it's going to continue to that uptrend. But the reason I would be getting out at this 162 is that is our gap fill area. And what you tend to see at gap fills is, especially ones that haven't been filled for a while and are very visible, is that they tend to be reversal zones. So I mean, going to any of here, you had the large gap here, you see it came into this level and reversed off that level. Where do we have any kind of other key levels? I mean, you did have another gap here, and again, this has been our reversal zone. And you can go into any stock and see this same pattern. It happens time and time again. Even here, it didn't get an exact reversal, but it did definitely struggle here and took a week or two to kind of break out of here, and only really slightly broke out before failing it. So these gap fills, the ones that are very noticeable, are usually a good area to be getting out completely of the trade, especially if you're up quite heavy on the position. So that's personally where I would be looking for the overall, the main or the furthest target I'm personally looking for is 162. Obviously we'll be locking in profits along the way, moving our stop as we go. But the 135 is kind of our first target, taking a tiny bit of profit here, or you don't even have taken anything, but at least then kind of move it to a break-even stop, because if it comes into this level and then fails, you don't really want to be in that trade, or you don't want to be taking on unnecessary risk, because the trade has worked. I mean, from there, even if you're getting at the 130 mark, you're still up 5%, so you don't want to be up 5% and then it ends up being a losing trade. So 135 is kind of that level where you're like, okay, if it hits here, it won't be a losing trade anymore. Worst case scenario, it's a break even. But we will be looking for further targets. 144 will kind of be where we chop off quite a large amount of size there. And then we'll be looking just to get out at each of these kind of key levels as we continue to go, looking to be completely out of it at 162. So that's how I personally see QCOM as a trade. As of right now, that's mainly using standard deviation and gap fills. So I hope you enjoyed the video, I hope to see you in the next one, and that's it. Peace.